All right, guys, this is Paul Singh, the market speculator from bullsonwallstreet.com. Today, I'm going to go over one of my current positions, Google here, and we're going to talk about the remount setup, which those of you who follow me or follow Canal post this article I wrote all the time also on Bulls on Wall Street, where we talk about the remount setup, the elements of it, and Google is setting up for that right now. So we'll talk about that, and I'm going to get into trade management, which is an important aspect of trading that not a lot of traders focus enough time on. And we'll do that in a second. But first, you guys know I have the swing trader service. Great for part-time traders, swing traders, even day traders who are looking for something else to diversify and get into swing trading. You can take a free trial here on bullsonwallstreet.com part-time. You can go over to professional trading here and there'll be the part-time trader, and you can get a 14-day free trial and you'll get my videos, my trade alerts, and everything else that we do here. But going back to now Google. Now this is a position I'm currently in. I've actually been in it for quite a while, actually going back to here back in late September. I got in at 652. So let's get over the initial setup. It was an earnings breakout pullback. And that's part of the reason why I've been willing to stick with it through this August 24th sell-off where, a lot of times I might have when I got the bounce back up, got out of it really quickly. But Google is a leading stock, leading the market, showing great relative strength, and most importantly, has that earnings catalyst here. This was a huge breakout here, a lot of positivity within the stock, and that has led to it being one of the relative strength stocks here. So it's leading the market, already almost at all-time highs, even though SPY is not near all-time highs. So there was the earnings breakout, the pullback here, got in at 652, and everything was working like gangbusters. We ran up here to 700, so about a 50-point gain. And I actually adjusted. Initially, I was going for the 50-point move, but I thought, you know what, this has moved so quickly, back up to its earnings breakout level. So I'm going to go for 750 because if it does cross 700, it should get to 750 pretty quick, especially with that earnings catalyst. And everything was going fine. I expected a little consolidation. Now, some people did take profits, or at least partial profits here. I was going for the big one. But, the market had other plans, and there was this big drop here. Again, when you get a big drop in a stock, you want to analyze, why is this happening? And we knew this was solely a function of the market. Nothing was wrong with Google. So my initial stop was around here at 640. So it was about a 10 to 12 point stop. And, I'd had a 50-point gain. So, we were looking at a 5-to-1 reward to risk, which is fantastic. And now I was going to 750. So we're looking at 10 to 1. So that's really good. 100 shares. So at one point I was up here $5,000. Is that right? 50 times 100? Yep, $5,000. But now I was down significantly at the August 24th sell-off. So it pulled back here when the market was pulling back and got right to where my stop was. And then I got this huge gap down. Now, this is where trade management comes in. Every trader focuses on setup, stock picking. Really, that's a small part of what you're doing, and just about anybody can pick stocks. There was picking Google. There's the reward to risk, which I was just talking about. That's another third. So it breaks out into thirds. When I think of what you need to do to be a successful trader, a third of it is stock picking. A third of it is knowing how to manage your risk. And the other third, which too many people ignore, is trade management. Actually understanding what's going on and adjusting accordingly. So I had I'd gapped down through my stop here. And if we look back at SPY here, same thing, SPY, big move down. We knew we were right here at the October 14th, 2014 lows here. Well, I don't know if was that the exact date there. Yeah, around October 14th. But we were at those lows, so there could be a bounce here. And what I often do when I get this situation where something has blown through my gap, especially if it's market related and not stock related, I'm going to watch to see how it handles that gap down. often that gap down is the worst time to sell because that's when the weak hands are going to get out. People are panicking and they just want the relief of being back in cash. And, that's part of the mental process, the mental game that you have to be thinking about. And we did the tougher thing here, which was when this was gapping down pre-market, we talked about it, that we're going to watch the gap down. We knew we were also hitting the pre-earnings breakout gap fill. So things were lining up technically sound here in the sense it was gapping right into that old gap fill, not below it. So that helped also. We were going to judge how it handled the gap fill and its gap down open. And then if it went too far down, there comes a point where you have to get out. Now I was at 650, this got down to 600. So I went from a $5,000 gain to a $5,000 loss. And I had to set all that aside and not want the quick relief of being out of the position and being back in cash, and use some trade management tools here and pay attention to what was really going on in the market. And we got to bounce pretty quick. Now, there's been some volatility back and forth, but now I'm back up 20 points above my entry at 19 points. So about 20 points. A couple of days ago, it was 22 points. 20 points above my entry, so I'm back up $2,000. Actually enough where I could get out and still get 2 to 1. But I'm not going to do that. Again, I love the way Google has handled this market sell-off, and I think now 700 is back in play. And if we can break through 700, 750 definitely would be in play here. So that's the trade management aspect of what's going on here. I could have easily taken a $5,000 loss, but using some common sense, understanding what's going on in the market has me back up at $2,000. So that's a $7,000 swing here. Now, that's the trade management aspect. Now let's get to the current setup. You guys following me, I love remounts. That's when a stock looks like it has failed a moving average or a key support level and then remounts that level. Oftentimes what goes on, a lot of stops are below that level. The algos and the market makers know that. You get stopped out and then there's a remount. And that's, this might not have been stop gunning, but probably wasn't stop gunning. But anyway, it's a remount here. Still a decent volume pattern here. We can kind of discount the negative volume here because, again, this was panic market related. It wasn't stock specific. And that's, sometimes you have to analyze this a little deeper than just saying big green bars, big red bars. You need, when you're looking at volume, you need to think through what's actually going on here. So now we've got the really nice remount here. We're flagging in here, consolidating here above the 50-day moving average, and we're looking for that next run up. So if you're not in Google right now, this is actually a decent time to get in. Remember, if if you've got a smaller account, think about percentage gain, not how expensive it is. Even if you can only buy 10 shares of this, if this goes up from 650 to 700, that would be $500 for you. So a nice position for someone with a nice gain for someone with that account size. So remount, breakout remount is setting up here, and then we'll see how it plays out. I'll have another video as this develops, and trade report members were alerted to this trade and all my other trades, and we'll know when I get out. A very similar trade that I'm currently in also. Amazon did the exact same thing. We held through, entered back here, held through the sell-off, and this line meant something. That was some kind of support here. Yeah, this was an past earnings breakout that I was watching. So if it went below that line, I would have stopped myself out, even with the market sell-off. Now we're remounting, much like Google. Amazon is a market leader right now, and I entered at 525, and we're up to about 540. My initial target was less ambitious here, at about 550, so that would be a 25-point gain. But I think I'm going to go for a bigger move here too, and I'll just hit another. I'm going to go over this more in depth later. We'll talk about bottoming formations, but oil, here's USO. a really nice bottoming formation, a lot of money coming in, a lot of room to the upside. And we are using in the report UWTI triple leverage up to 1350 here, and we're looking for initial profit taking at 15, but I'm only going to take half off, move my stop up to entry here. And again, this was a remount setup, which we love. And then there's some room to move. The first open gap is all the way up here at 27, so that would be a huge move. I might not play it all the way up there, maybe even 20. I'd be looking at that would be about a 300%, 200% move there from the entry. So that's it for this video. Again, trade management. Remember to focus on that. Focus your learning, your education on that, and pay attention to these remounts. There's a lot of them. With a lot of stocks pulling back and now recovering, you're going to see a number of these remount setups. So till next time, keep an eye on Google.